this is Lauren with OnQ Financial, and this is my Mortgage Minute. Thanks so much for tuning in. Today I'm going to be talking about a USDA home loan, or United States Department of Agriculture. They offer a home loan for rural development, or RD, and that loan is designed to offer more favorable financing terms for areas that are considered underdeveloped or rural locations. Now, an area is in a rural location if its population is 25,000 or less. Now, how do we determine a population size and if it's eligible? You can go on this website, it's the USDA eligibility website, and simply type in an address to see if that property is in an eligible location. USDA has maps of eligibility, and they'll show you what geographic areas might be eligible for USDA financing. So there's two requirements. One is the eligible location or geographic requirement on a USDA home loan, and the other requirement is your personal requirements for credit and income. Now, USDA is limited to certain income limitations based on household size in certain counties. A general rule of thumb is they're going to look at all applicants and all household income. So if it's just the husband on the loan, but the wife also makes money, they're gonna look at both income to determine if the household is eligible for a USDA home loan. So keep that in mind. Next, they're going to look at your total debt to income ratio. There's a front and a back end ratio, and the front end ratio is simply the housing payment alone in your income and how much of the housing payment is the ratio against your income or debt to income. The next ratio, or the back end ratio, is the total debt to income, housing payment plus all other debts included, and that is a 28 and 41%. So in the front end, we're talking about a 28% debt to income limit, and on the back end, we're looking at a 41% debt to income limit for USDA home loan qualifications. Now, sometimes the guaranteed underwriting system through USDA or GUS will allow for those ratios to vary based on certain compensating factors that they see in your profile. So really good credit or lots of money in the bank, they might allow you to go a little higher on that debt to income ratio, but strictly talking about guideline purposes, it's a 2841 debt to income requirement on there. The minimum FICO score is a 640. This loan is up to 100% financing and is for a primary residence only. No reserves are required, and you don't have to be a first-time homebuyer to take advantage of this excellent financing opportunity. There is a 2% guarantee fee financed into the loan amount and an annual fee through USDA that is broken out into 12 monthly payments and included in your total mortgage payment. If you want to check and see if you are eligible or if the property that you're looking at is eligible for USDA financing and 100%, call, text, or email me, and I'm happy to take a look at that for you. Thanks so much for tuning in, everyone, and I'll see you next time on My Mortgage Minute.